Jesse Livermore's genius was not located in a crystal ball, but in his development of a rigorous, scientific method for confirming the authenticity of a trend. He approached the market not as a gambler, but as a master diagnostician. He knew that a real trend, like a healthy organism, exhibits a series of clear and unmistakable vital signs. His job was to observe and verify these signs before committing his fortune. He understood that a speculator is, in effect, a detective. A breakout in a stock is merely the initial report of a potential crime against the shorts. It is not, by itself, sufficient evidence for a conviction. The detective must then gather a confluence of corroborating evidence, building an ironclad case before he acts. This process of confirmation was the very heart of Livermore's method. What follows is an exploration of that method, a dissection of the evidence he demanded from the ticker tape before he would grant a trend the designation of real. This was not a matter of intuition alone. It was a cold, hard, evidence-based procedure, designed to protect him from the market's endless deceptions. The investigation always began at a single, critical juncture, the pivotal point. This was the first witness. A trend, to be considered genuine, had to be born of a powerful and decisive breakout from a sound consolidation base. It had to cross a key resistance level, often making a new high for its entire move. This was the first piece of evidence. But the character of this breakout was of supreme importance. A stock that crept quietly over its pivotal point on low volume was immediately suspect. It was a witness who mumbled and refused to make eye contact. A genuine breakout had to be loud, clear, and emphatic. It had to occur on a dramatic and unmistakable surge in volume. This explosive volume was the sworn testimony of the smart money. It was the footprint of the large institutional players whose immense buying power was necessary to fuel a sustained advance. Without the testimony of heavy volume, the breakout was likely a trap, a false move designed to lure in the hopeful and unwary public. A decisive breakout on massive volume was a powerful opening statement, but it was not the entire case. The second, and most immediate piece of evidence required was the follow-through. A genuine trend, having just broken its shackles, does not pause to rest. It runs. Livermore demanded that a stock show him an immediate profit after his initial probe entry at a pivotal point. The stock had to continue advancing for several days, pulling away from the breakout point with energy and momentum. It had to act right from the very first moment of its liberation. This immediate strength was the market's confirmation of his judgment. It was the witness volunteering new, incriminating evidence without being prompted. It was a sign that the buying was aggressive and that the path of least resistance was truly, powerfully, upward. If a stock broke its pivotal point and then, in the next day or two, fell back below it, the case was immediately dismissed. This was a false move. The trend was a liar. The disciplined speculator would sell his position without a moment's hesitation, accepting the small loss as the price of a faulty investigation. He did not wait for more evidence. The first key witness had already recanted its testimony. Once the initial breakout and follow-through were confirmed, the detective's work shifted to a deeper analysis of character. The speculator must then study the nature of the advance. Is it healthy and orderly, or is it feverish and erratic? A real, sustainable trend moves with a certain rhythm and power. The daily advances should be substantial and achieved with a sense of ease. The stock should feel as though it is being pulled upward by an invisible and powerful magnet, for in a sense, it is. It should not be a series of tiny, nervous, fractional gains on low volume. That is the sign of a weak stock struggling against an unseen supply. A genuine leader in a bull market is a thoroughbred. It runs with power and grace. The character of the price action is a subtle but vital clue to the authenticity of the trend. Of course, no trend moves in a straight line forever. There will be periods of correction. The speculator must understand that these pullbacks are not only normal but necessary. However, the character of these corrections is the fourth, and one of the most crucial, pieces of evidence. In a healthy and powerful bull trend, the pullbacks must be shallow and brief. They are moments of rest, not signs of distress. A stock might advance for several weeks and then pull back for a few days, digesting its gains before continuing its primary advance. But the key to reading these pullbacks is to watch the volume with the intensity of a hawk. A normal healthy correction must always occur on dramatically lower volume than the preceding advance. This is a non-negotiable piece of evidence. Low-volume pullbacks signify that the selling is not aggressive or institutional. It is merely the profit-taking of small, nervous traders. The strong hands, the smart money, are holding their positions. A stock that pulls back on heavy, churning volume is a major danger signal. It indicates that distribution may be taking place under the cover of a seemingly normal correction. A speculator must learn to read the selling as much as the buying. The character of the selling during a correction is a more reliable indicator of a trend's health than the character of the buying during an advance. The fifth piece of corroborating evidence came not from the stock itself, but from its family. Livermore knew that a genuine trend is never a solo performance. It is a group phenomenon. A stock does not exist in a vacuum. It exists as part of an industrial group. If a leading steel stock broke out to new highs, he would immediately demand to see confirmation from the other major steel stocks. They did not all need to move on the same day, but they needed to follow their leader in due course. They needed to honor the move of the general of their army. If the leader advanced and its sister stocks remained sluggish, flat, and unresponsive, the trend in the leader was immediately suspect. It might be a move based on a company-specific rumor or a manipulative operation, not a genuine, industry-wide shift in fundamentals. A general without an army cannot win a war. This group confirmation was a critical piece of evidence that the buying was broad, authentic, and likely to be sustained. It told him that the big money was not just interested in one company, but in the entire sector. A trend that lifts all the boats in a group is a powerful tide indeed. The sixth and final witness, the one whose testimony could overrule all others, was the general market itself. The speculator must consult the market averages as a supreme court. Their verdict is final. An individual stock, or even an entire group, cannot sustain an advance for long if it is fighting against a declining general market. To trade a long position in a bear market is to bet on a single swimmer's ability to defy a tsunami. It is a low probability, high-risk endeavor. Livermore would constantly check the action of his leading stocks against the action of the market averages. The averages had to be in a confirmed uptrend to support his long positions. They had to be making new highs along with his stocks. The entire army had to be marching in the same direction. Any sign of weakness or a change of character in the market averages was a signal to become cautious. It was a warning that the very foundation upon which all his individual trends were built was beginning to crack. A speculator who ignores the verdict of the general market is a speculator who is destined to fail. A more subtle but powerful piece of evidence was the stock's position relative to its own history. Livermore had a strong preference for trading stocks that were breaking into new, all-time high ground. The reason was one of pure, practical physics. A stock making a new all-time high has no overhead resistance. There is no trapped supply of old buyers from a previous advance who are waiting to sell their stock and get out even. The stock is in clear, open air. The path of least resistance is truly, demonstrably, clear. While a stock could certainly have a real trend without making new all-time highs, this condition was a powerful confirmation that the trend had the potential to be explosive. It was like a ship setting sail on an uncharted ocean, with no old ports of call to slow its journey. So, how did Jesse Livermore know a trend was real? He knew it by building an airtight case, based on a confluence of evidence. No single piece of evidence was ever sufficient. He required a full and complete testimony from the market. He required a powerful, high-volume breakout from a pivotal point. He required an immediate and vigorous follow-through. He required the advance to have a healthy, orderly character. He required all pullbacks to be shallow and on low volume. He required confirmation from sister stocks in the same group. And he required the support of a bullish general market. Only when all these witnesses were in agreement, when all the evidence pointed to the same conclusion, would he consider the trend to be real. It was only then that he would commit the bulk of his capital, pyramiding his position with the supreme confidence that comes from having the market itself on his side. This entire method was the source of his legendary emotional discipline. He did not need to be swayed by hope, for he had a rigorous, evidence-based process of confirmation. He did not need to be paralyzed by fear, because his risk was managed by the same process of listening to the tape's verdict. The amateur speculator sees a price moving up and emotionally declares it a trend. The master speculator sees a price moving up and begins a cold, methodical process of cross-examination. He is a prosecuting attorney, and he will not rest until the market has proven its intentions beyond a reasonable doubt. To know a trend is real is not a moment of sudden, mystical insight. It is the logical conclusion of a patient, disciplined, and scientific investigation into the facts of the ticker tape. The tape is the only witness that matters, and the speculator's job is to listen, to verify, and then, and only then, to act.